Hey guys, it's Julie here with TipRanks, and today we're taking a look at two strong buy utility stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies in the utility sector. Both of these stocks do come in with a strong buy consensus from Wall Street analysts with price targets that would imply some double-digit upside potential. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. I found today's stocks using the TipRanks stock screener. Found right at the top of research tools with the stock screener, we looked for a medium to mega market cap, a strong buy consensus in the utility sector, and price targets with some double-digit upside potential to get our list down below. And just before we jump into today's stocks, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's get right into our two strong buy utility stocks. First up, we're taking a look at AES. They trade under the ticker AES, currently priced at $17.51. They have had some ups and downs this past year and overall are up about 33%, in the last 3 months fairly flat at 0.1%. They do currently score a 9 out of 10 on the TipRanks Smart Score with some very positive crowd wisdom and bullish new sentiment. AES is an American utility and power generation company. They own and operate power plants that generate electricity using a variety of fuels, including coal, gas, hydro, wind, solar, and biomass. They distribute electricity to residential, commercial, industrial, and governmental customers and are committed to advancing their solar energy solutions. The company's introduced an AI-powered robot for solar panel installation. This robot is known as Maximo, and it is a first-of-a-kind robotic solution that works alongside construction teams to help meet rapidly growing renewable energy demand. AES is a dividend-paying company with over a dozen years of dividend growth, and their most recent quarterly dividend was 17 cents per share for a dividend yield of 3.94% and a payout ratio just above 30%. They'll be sharing their next quarterly report at the end of October. This does follow mixed results for their Q2 back in August. For their Q3, analysts are anticipating earnings per share of 60 cents, which is in line with last year's. This follows their Q2 earnings per share of 38 cents that did beat expectations by 2 cents per share. However, revenue came in at $2.94 billion, missing by about $600 million. Recently, initiating coverage on the stock with a buy rating was an analyst from Jefferies. He said that AES, which owns a global portfolio of energy infrastructure assets, is on a rapid path to have the vast majority of its earnings generated by U.S. renewables and regulated utilities while exiting coal exposure. The firm, which views the stock's underperformance as a sign that the market is cautious about their ability to execute, calls the stock a way to gain exposure to U.S. renewables with a quality improvement twist at a discounted price. With 7 current analyst ratings, the AES stock does come in as a unanimous strong buy. And the average price target of $23.83 implies an upside potential of 36% from current prices. Looking at those ratings down below, we can see our Jefferies analyst here at $20 for an upside of 14%. He is actually our low-end price target there. Our high-end price target comes from JP Morgan at $29, which would imply an upside of 65%. And our other strong buy utility stock is PG&E. They trade under the ticker PCG, currently priced at $20.53. Their stock has climbed 24.8% in the past year and has gained 15% in the last 3 months. They do also pay a dividend, but it is fairly small with a yield of 0.2%. PG&E is the Pacific Gas and Electric Corporation based out of California. The company is an investor-owned utility, or IOU, which is a private sector firm that acts as a public utility provider, founded back in 1905. And in California, they're not unique as this IOU, as the state has 6 such companies providing electric power. PG&E provides natural gas and electricity to customers in Northern and Central California, producing or buying energy from various sources, including renewable and conventional. The company was recently awarded $34.5 million in federal grants. These come from the U.S. Department of Energy and will support 19 hydroelectric projects across their system. And back at the end of July, the company did come out with an earnings and revenue beat for their second quarter earnings report. Their third quarter will be coming out on November 7th. For their Q2, they reported earnings per share of 31 cents, beating estimates by 1 cent per share, and revenue came in at $5.99 billion, which did grow over 13% year over year. They updated their future guidance and forecasted no equity needs for 2024. The same analyst from Jefferies that recently initiated coverage on AES also initiated coverage on PG&E. The analyst said that the stock is trading at the lowest utility PE, which the firm views as overly punitive for wildfire risk and premium growth. After a deep dive into the PG&E drivers, the firm says it has a renewed sense of confidence in the 9% plus long-term earnings per share growth rate guidance, which it notes is well above the average 5 to 7% utility rate. PG&E currently has 8 analyst ratings, coming in as a strong buy with 6 buys and 2 holds. And the average price target is $22.63 for an upside potential of over 10%. Looking at some of those recent ratings here, we can see our Jefferies analyst at $24 for an upside of 17.5%. Quite a few other analysts coming in at that same price point. Our low end is a hold rating here from Evercore in July with a downside of nearly 12%, while our high end price target is $26 from UBS with an upside of 27%. So that is a quick look at 2 strong buy utility stocks, both with some double-digit upside according to Wall Street. Let me know your thoughts on these companies in the comments down below and what other stocks in this sector you love. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.